Alright, what's up everybody? So today I'm making a video on how I decide if I'm gonna buy a stock. Pretty much just like seeing people, because we've been quarantining for so long, just seeing people now that I've got this Instagram and stuff going. I've got a lot of questions from people that want to learn how to do this and are asking me how they can do it. And it's kind of hard for me to just tell you exactly on the spot because there's so much stuff you need to do. So that's why I'm making this video to kind of give you an outline how to decide if a company is right for you to buy. And so before we get in, there's a few main points I want to make that investing and trading are completely different. So you can make small money on trading. Like if you have like a few K, it's easier to make money on trading, but if you want to make big profits on big money, investing is the move, right? Like if you look at any fund that's managing a lot of money, they're not trading, they're investing because trading is just risky. Trading is gambling. Pretty much trading is gambling and investing is not gambling. It's you know what you're doing, right? Hope that makes sense. So you need to plan to hold this company for at least 3 years. So you need to be looking in the future and look out like how you think the company is going to perform in the future. Warren Buffett has said that he wishes that there was yearly tickers on stocks, but obviously that would never happen because there's so much money in trading and options and stuff like that. So obviously yearly tickers would never happen. But you have to approach it like that you only get to see the price of the company move year by year because the price is not what is affecting you from buying the stock or not. It's how you decide if a company is overvalued at the time, yes. But if you believe in the company and the price is right, then the ticker shouldn't matter. So you need to fully believe in this company and that it will succeed, right? You need to know the ins and out of the company, right? You don't just buy because you've heard about it, blah blah blah. Like this is your money. You guys have to think that imagine that the company is just starting up, right? It's your friend who's starting a company and he needs money to invest, right? You're going to want to know what his plan is, what his competitors are, what he's doing with his money, how he's spending his money. You're going to want to know all that stuff. So by investing your money in a stock, it should be no different. Like you need to approach it like that. Because if you don't, then you don't fully understand what's going on. And that's just what it comes down to. And at the end of the day, there's just more risk involved and you might not make a gain. So you need to be disciplined in your investments. Don't buy off bias, buy off information. Okay, so yeah, you need to be disciplined. There's so many companies out there. You don't need to buy every one, right? How many companies are on the market? Like I don't even know, thousands probably, 5,000. There's a shit ton of them, right? And you don't need to buy every one. You need to buy a few, right? Like you don't. I posted on Instagram about this. Haven't made a video. I don't know if I will, but you don't need to diversify in the stock market. Okay, diversification across different, like buying different assets and stuff like that. Yeah, that makes sense. But just off your stock portfolio, you don't need to be diversifying. And if you believe in a company, then buy it. And don't buy off bias. Don't just be smart about this. So yeah, all right, let's dive into this. All right, so the first thing you're obviously going to want to do is look up the company, right? So I chose Tesla because Tesla is my biggest investment. I'm so bullish on this company. I could honestly make an hour-long video just explaining why I think Tesla is going to go to 5,000 in a few years, but that's a different topic. So the first thing you want to look at is the chart. Okay, so usually I like to look at the max, but I'll explain it. So pretty much, as you can see over time, this company is going up in value, right? This is not an accident. If a company is going up, then it's for a reason, okay? Companies don't just accidentally go up, and if they do, then it'll be obvious after you watch this video. So let's look at the 5-year analysis. It's not that hard to see that Tesla's a winner, right? They're doing good stuff. So this is the first thing I look at, right? And this is how I decide if I'm interested, right? So I have Ford pulled up, right? So when you're scanning through different companies, you would look. So let's say I pull up a company, that stock chart looks like this. And we see in the past 5 years, the company is down 62%, okay? It's a losing stock. It's gone down consistently for a long time. So right off the bat, I would not analyze Ford anymore. So just based off, because this is reiterating the fact that you don't need to buy every company, right? And if it was a newer company, then I would understand. But Ford, we all know Ford. It's been around, like it went public, I guess, in 1980. it was doing good for a bit, but just look at this. The past 20 years, it's done nothing but go down. So this is just a losing company. And unless Ford changes it's like something drastically, drastically, then maybe I would change my mind. So yeah, so after I have this, they have these financials, right? And we'll get into this later, but these are just very brief financials. So what I want you to look at is the revenue, right? So the revenue is there's going to be this blue, and you can see it's consistently going up. So what does that mean? It means that they're making more money every year, right? In 2016, they were making this much. 2019, they're making this much. That's a good sign. They're increasing their revenue, okay? Their profit margin. So that's basically, it means like how profitable are they doing? You know, like their profit margin is negative 10% here. That means they're still losing money on the baseline. They're not profitable, okay? And so we can see it's going up, right? So they're negative 3.5% here versus negative 10% here. So they're getting more profitable and more profitable and more profitable. It's same thing about net income. Their net income isn't the best, but that's another thing about profitability. Tesla's not profitable, and a lot of companies in the market these days are not profitable. But this is when you look at years out in the future, okay? So overall, this is good. I like to see this. Revenue's increasing, profit margin's increasing. Okay, this is good. So let's go over to the balance sheet, right? So let's look at the total assets. Total assets asset is pretty much anything that they have. So the assets that are positive. Assets are anything they have that are positive, that are making the money. So we see 22.7 billion, and we've seen steady increase to 34 billion, right? It's not massively increasing, but it's not decreasing, right? If we saw this going down, that would be a bad sign. Debt to assets, it's about the same. It's actually going up, which is not the best sign, but that's another thing. Tesla's not profitable yet, but they're getting to profitability. So debt to assets, this is definitely a red flag. If it's going up, this is definitely a red flag that you'd want to look at. But in certain circumstances, I'm fine with it. So yeah, that looks fine. So cash flow, the one that I like to look at is operating. Because operating is pretty much, it's just profitability. It's like nothing else to do with the company. It's like how much it costs to make the product, how much it costs to sell the product. It's just that the operation of the company, is it making a profit or going down, right? And so for me, this is the most important one. Financing, yeah, and investing, those are important also, but I preferably like to go to the operating because this is the overall profitability of the company, and we're seeing that it's increasing. It actually is positive 2.4 billion, and it's negative 100 million. So this is good. This is good. So right off the bat, this is a company I would pursue more. So I've seen the basics, and that can usually take you that's just a quick brief, minute to 2 minutes. That's when you're flipping through companies. I would stop and say, okay, I want to look more into this company. So that would be the first thing I look at. All right, guys, so now we're at Yahoo Finance. Pretty much every company is on here, and just go where we were just recently at. Just look up whatever company you want, then scroll down. It should be the first or second link. So on the summary page, pretty much the only thing I'm looking at is the PE ratio, and it's NA because the company's not profitable. And then there's the EPS, which is the earnings per share. And then TTM means trailing 12 months. So it's pretty much just looking at the past 12 months. So EPS, let's start with EPS. So this is earnings per share, which is basically the profit minus dividends divided by the overall shares. And this is an indicator of profitability. So per share of stock, Tesla's losing 81 cents. So you can compare this with them in the past, and you can see if they're growing on the profitability or if they're getting less profitable. That's a good indicator. But there's a ton more indicators, so we'll get into that. And then the PE ratio is the other thing I'm looking at, which is the price of share to earnings. And what you do with this is you would compare this to competitors or past numbers also. And a high PE ratio means that the stock is overvalued. But overvalued doesn't always mean bad, because sometimes if it's overvalued, that means that investors are predicting big earnings in the future. So this is when a company would be trading rich, right? Like Amazon is one of the biggest examples. Their PE ratio is 250 ish, like maybe even more since it's gone up so much. Actually, I haven't checked it recently because I'm not in Amazon. But normally a PE ratio you would want to be looking at is around 15. But we see Apple. I have Apple pulled up right here. Apple's PE ratio, I guarantee you, is more than 15. Let's check. I guarantee you it's more than 15. Yeah, see, it's 25. And generally, if you're buying a company, you would not want a PE ratio at 25. But Apple is a very strong company, and people are predicting good earnings in the future, which is fair, right? So Apple, you would say Apple trades rich because a 25 PE ratio is generally more, but it's for a good reason, right? So the next thing I want to look at, there's statistics, which I mean, you don't really need to look at that. Financials. Let's go to financials. So this is all we're doing right now. This is like the quick overview, right? This is just like really quick if I'm trying to analyze a company or if I'm trying to decide if I want to analyze it more. This is what I'd look at. So this right here, so this is where you get to the numbers, right? So what I like to look at is total revenue and the gross profit, okay? So first of all, you want to see total revenue, right? So you see in 2016, they got 7 mil. And I'm pretty sure these are actually billions you'd add, but we'll just say 7 mil because that's what it has. These are all represented by thousands. Yeah, I see all numbers in thousands, but for the sake, I'm just going to, so I don't confuse myself, I'm just going to 7 mil. So in 2016, they were making 7 mil in profit, right? Next year, boom, increase, boom, increase, boom, increase. So you can see that they're making more and more money every year, right? That's what you want. You don't want a company making less money. Like, just use some common sense. And another thing you need to look at is the cost of revenue, okay? So yes, it's good that this is increasing, but if the cost of revenue is increasing more than this is increasing, you're not actually gaining profits, right? So this is when the gross profit comes in, which is just this minus, or this actually minus that, I guess. So this is the gross profit, and this is what you want to look at. Even if this is increasing, this could be decreasing, but like I like what I see. The gross profit is doing good. So let's look at the operating income, right? So the operating income is basically without all the extra bullshit, just day to day. Is the company making a profit off just like buying and selling, right? And so we can see 2016, they were down 600 mil, whereas now they're up 80,000, right? So they're on the road to profitability, and Tesla is going to be profitable in a few quarters. So then there's some other stuff that you can look at, but I actually like to look at this stuff more on the financials. So just based off what I've seen, this is a good company, but we're not near enough to be able to buy it yet. So next we're going to dig deeper. All right, so you've looked at the company already, you figured it out, and you think, all right, well, I like where this company's headed, it looks good. Next, you go to their investor relations page, right? So let's look up Tesla investor relations. Every single public company has an investor relations page, okay? And this is where they post all their filings. Pretty much everything you know in order to be an investor will be on here. So as we see Tesla, they have the company description, right? And before you invest, you need to know everything about the company. You need to know what they do, where they do it, what products they sell, how much their competitors sell the products for, you know what I'm saying? So you know everything. So you could spend hours on this website, and you should spend hours on this website if you're really gonna invest in it, right? So they have the Model 3. You can check all their stuff right here. So right here, so there's the financials and accounting, but we're going to go to the SEC filings. Okay. So what we're looking for is the 10K, and let's actually go to the financials end. All right. So right here, the quarter one. So you would want to look at, in my opinion, you'd want to look at the quarter 4 annual, because this will tell you everything they did for the whole year. But this is the quarter 1 right here. This is the most recent one, okay? So let's go to quarter 1 update. And this is when you're getting to the juicy information. This is when, all right, I'm going to start spending a lot of time, right? So this is 25 pages. And there's going to be a lot of these that not that I want you to look at, but that I do look at. So we would see that, what are we in, financials? So yeah, let's go to the SEC filings. So we are looking for, let's go to 2020. What have they filed this year so far? So 8K. So pretty much the different, so there's different categories. There's going to be 8Ks, 10Ks, 10Qs, but pretty much what you want is the 10K. That's going to be the main one. So they have the 10K, pretty much the analysis of the company, everything, and it's due 90 days within the fiscal year. The 10Q is just that shortened, and then the 8K is pretty much if they do something major. So look, this is unscheduled material event, the 8K right here. This is after they've already filed the 10K. If they do something major that they need to report, then they'll drop an 8K. But 8Ks are not really, like, they don't, they're not big. So I'm going to pause it right now, and we're going to come back once I have all the documents open. All right, so I found the 10K. So this is the Q1 2020 update. This is a 25 page long document, but the 10K, this is a 70-page annual report. And I'm not investing in any company that I haven't fully gone through this whole thing. And obviously, like, it's not fully 70 pages. Like, example, like, this is BS. Like, there's just regulations, like you're checking a box here, like Elon's checking a box here, so you obviously don't need to read that, but there is like stuff that you need to read in this. I could do another video going through this all, but I just don't really want to do it all right now. Like, I've already gone through it, that's why, because I own Tesla. So like, example, like all of this, like we're 10 pages in and you wouldn't need to read any of this, but there is a lot of stuff in here that you would need to read. I'm trying to find some info that is relevant, but it takes a while. So let's go back to the Q1 annual update. These are like earnings. This is what their earnings are. When you see a company like will jump or fall in earnings, it's because of this document right here. So let's go to Q1. And so pretty much what they're going to do is they're going to have their highlights, right? And so let's look what they said, okay? So $1 billion increase in our cash and cash equivalents in Q1. So now they have $8.1 billion. So they're going to be posting their highlights right here. And this is all good. You want to read through their highlights, but you don't want to just read through the highlights because they are the highlights, right? You need to know everything. They're obviously going to be putting their highlights in their highlights. So you don't want to be looking at the good stuff. So you want to be looking at the bad stuff to know if you should buy it or not. So, all right. So now we're getting into the numbers, and all this stuff can look confusing, but let me tell you, in the broad sense of thing, you got the Q1 2019, right? Q2 2019, Q3, Q4, and then Q1 2020. So it's honestly not that hard to look at because, I mean, let's just look at this. Automobile revenue in quarter 2019, they were making this much money, around 4K. Q1 2020, they're making $5,000. And it takes a little bit of thinking to realize, oh wait, they're going up, right? Year over year, that's 38%. And not to mention that with the whole Rona situation, it messed a lot of stuff up. So these numbers are going to be not a little, actually, they're going to be a lot down. But like, that's what happened with Rona. So you have to realize that. So there's a lot of companies that when they've been posting this, it's going to get hit way harder than Tesla, which is another reason that I like Tesla, because good companies, they weather bad situations well. Like, look at Tesla. So automobile gross profit, like I was saying earlier, gross profit is what you want to know, because this is the revenue minus the expenses, right? It's up. How much is it up? So yeah, 75%. That's insane. BP is just pretty much base points. So this is 5.4% that it's up. I mean, yeah, you could just. Yeah, I guess 5.3. My bad. But yeah, this is just like a weird statistic they use. Pretty much 100 is 1%. I don't really understand why they do it. It's probably just some accounting thing, like whatever. So total revenues. So this would be another thing you look at. Total revenues. Let's look at this. So is this okay? So quarter to quarter. Okay, so another thing, you don't want to look at quarter to quarter because quarter is it's like a seasonal, right? So for example, Q1, it's good, right? And then you can see Q2 going up and then up and then up. But if you compare Q4 to Q1, you're gonna see quarter to quarter minus 19%. That's not what you want to look at. You want to compare quarter to quarter, which is why they have the year over year right here. Because depending on the quarter, there's gonna be more buying or more selling, and that's just seasonal. That's just how it happens. So you don't really want to compare quarter to quarter. It's better to look at year to year. So I would look at all of this. You need to look at all of this stuff. And so gross profit is increasing 118%, right? Tesla's becoming really profitable really fast. And once they break that barrier, they're going to get so profitable so fast. So operating expenses, So let's see the loss. Okay, so yeah, if they're in parentheses, this is a loss, right? So 522. This is probably millions. I haven't. I'm pretty sure. Yeah, this will be 522 million. So they're doing a 522 million loss. You look at to compare it to now. That's a profit, right? We're going from a loss of 500 mil to a profit of 283 mil, 154%. That's like great. So all this stuff, like the operating margin, getting better and better. So that's what you want to see. The bigger the margin, obviously, the more profitable they are. So you know what I'm saying? Like you just need to look through all of this stuff. Free cash flow. You want to have cash on the balance sheet. So right now, it looks like what happened here? So yeah, so this doesn't really surprise me. I guess they went down in cash and cash. Oh no, yeah, they're up 268%. So pretty much cash and cash equivalents. Cash equivalents are just like short-term financial agreements that they can get rid of in 3 months if they needed to. So this is pretty much just cash. Like how much cash do they have? And you want to see a lot of cash. You need to see a lot of cash, especially right now, because it's just like think about it in a business. If something like Rona happens, then you can't do anything. It's always good to have cash on deck. So, and then there's more. You would want to read all of this, right? Obviously, you need to know all of this, and if you like what you're seeing, you can keep going. Yeah. So there's just a lot of stuff. I could. If you guys want me to go through this whole thing, I will. I already went through it. Like every time one of my companies that posts earnings, I read through all of this, and that's what you need to be doing to make sure you're a smart investor. Because if something was to drastically change, like in a bad way, then you would need to know that to make an educated decision. And so the 10K, pretty much they're gonna have all that stuff that we just looked at. Plus, they're gonna have they're gonna talk about their competitors and what's gonna give them the financial advantage. Like this is pretty much just them typing out everything to know about the company, and that's why the 10K is so important to read. And so these are basically the two. Obviously, there's more to look at. Like I would recommend going through a lot of this stuff. But if you're just a base investor, then you don't have to look at any more than these two. Everything you need to know will be on these two. So yeah, that is that part. Let's go to the next one. All right, so you've looked at all the financials of the company and you've decided that you like the direction it's going. You see profitability in the company, okay? All of that. So now what you're going to do is you're literally going to analyze the business. You're going to look at the Model S. You're going to think, okay, what is the Model S? How much does it sell for? What's its competitors, right? And the thing about Tesla, why I'm invested in it, no, they don't have competitors, right? Like they are a electric car company, right? Is there other electric car companies? Yes, but if you're gonna buy an electric car, what electric car are you gonna buy? You're gonna buy Tesla. Like guys, the Tesla, their fastest car, the Roadster, is faster than a Bugatti. First of all, it's faster than a Bugatti. It's 200K compared to a Bugatti, which is 2 mil, and it can drive itself. Like no one can compete with it. It's just stupid. Tesla's gonna be so far above everyone else in 5 years, and they already are above everyone else. Not to mention, so they have all of this, right? The Model X, you're gonna look at how this compares, how the Model 3, how the Model Y. You know, look at what do they have coming out in the future, right? They're solar. A lot of people don't even know that they have these solar roofs. Okay, yeah, this isn't a video about Tesla though, but yeah, Tesla's the move, guys. I'm telling you, Tesla's the move. Hop on the train. But so after this, so yeah, you need to be familiar with all their products, get familiar with their competitors, and then what you're gonna do is you're just gonna look up news. You're gonna look up the news because the news is what drives the price. At the end of the day, it's news based off earnings, news based off what people think is gonna be, how much it's gonna be. Like news will drive the price day to day. And so if people are saying relatively good things about it, then okay, that's good. But if people are saying bad things, then you need to take that into account. But all of this stuff is you need to take in all of this stuff, and there's so much more. And so the last thing that you need to do before you buy a stock is I want you to wait. You need to wait because, hear me out, what's going to happen if you wait a week? Realistically, nothing. And let's say the stock does jump 10% in a week, it's probably volatile and very volatile. And if it jumps 10% in a week, most likely it'll be down 10% sometime soon, right? And so you need to wait because keep in mind this is going to be a long-term investment and you need to think about it, right? You need to and just every question you have about the company, you need to have it answered. And then the next thing you need to do, what's the word for it? It's we learned about it in econ. It's like so like what? How much are you gonna make? Do you think you're gonna make more in this? Oh, opportunity cost. That's what I'm thinking. Opportunity cost, right? The amount of money that you're gonna invest in a company, say Tesla, is it better spent in a company to Apple, right? Let's say you like both. You need to really think about, okay, I've seen what Apple stock has done, right? I see where it's trading at, okay? So it's gone from this to this in 5 years. Well, Tesla has done a lot more. Tesla's newer, and so you know what I'm saying? This is why I don't think you should diversify your stock portfolio, right? It's because let's say you like Tesla and Apple. We'll pick one. Do you think Tesla's going to be better in 10 years? Like, do you think Tesla's going to grow more from now to 10 years? Or do you think Apple's going to grow more from now to 10 years? If you think it's Tesla, why would you put money into Apple? It doesn't make any sense. So, yeah, that is basically the process I use when I'm evaluating whether to buy a stock. And I need to reiterate the fact you need to wait. Because, guys, you need to be comfortable with the stock going down 20%, going up 20%. Because if the stock goes down 20%, that does not mean anything has fundamentally changed with the company. Something could be changing with the company, but if there's not, and you bought at 20% higher, don't sell at 20% if you bought at 20% higher. Unless something has dramatically changed. And there's a lot of formulas you can do to figure out if this is a good price for the company, blah, blah, blah. But you need to just watch the stock. Go look at the chart, say, okay, is it a good price now? Is it a bad price now? And just use common knowledge. And this is the biggest thing. If it drops 20% and nothing has fundamentally changed about the company, let's say this was a big issue with Tesla, right? Why Tesla was so low. Let's say it comes out that there was a massive Tesla crash, right? Autopilot took over and crashed, right? Realistically, the stock would probably drop 15%. I don't know, actually no, 15 is massive, maybe 5%, but we've seen it in the past, right? Tesla would just be getting hammered by all these news articles. Realistically, maybe 1 out of every million car crashes, right? But if you think about a human drivers are crashing way more often. And it's articles like this that we like. So you need to realize is the news. So let's talk about volatility, okay? And volatility is like, we're talking about like a stock that, let's draw real quick. All right, so volatility, this is a volatile stock. Boom, boom, like it's going up and down and up and down. That's a volatile stock right there. How a stock should be moving is, boom, like this. But let's look at especially in this market, there's so many stocks that will just bounce for no reason other than news, right? And if the stock that you like, you've done all the research, is getting hammered by bad news, bad press, what's going to happen? It's going to drive the price down. But guess what? The company is still worth what it is before the bad news, right? Because what's going to happen? The bad news is going to pass. And when the bad news passes, it's going to go like this. So you have to work with that, right? When we're buying, we want to buy when there's bad news, right? And when we're selling, we want to sell when there's good news. It's easier said than done, but just take this away is if you really like a company and it's getting hammered by bad news, unless the bad news is going to change the company for the long run, which 90% of the time it's not going to, it's good time to buy during bad news, okay? I think that's the end of the video. There's so much more to buying a stock, but I'm pretty much, I said like the main areas. If you want me to analyze a full balance sheet for you guys or a full 10K, just let me know. Oh wait, I kind of forgot something. I'll just type it right here. Don't panic buy. Okay, there's been so many cases where I look at the balance sheet and I'm like, oh, I like it, or I like this about a company, I like this about a company, and I spend hours researching, and in that final hour, I might see something. Let's say they have a massive amount of debt, and let's say they have 3 million. I literally just was analyzing a company, spent like 5 hours on it yesterday. I really liked everything about it, but they had $3 billion of debt, and their revenues were only $5 million annually. Just that is not a good combination, because if it's going to take them 6 years to pay back their debt, that's just like, think about that. That's literally 6 years of revenue down the drain. So that is not a company that I'm interested in. And you know what? Maybe it could go up. It could go up. Like, I don't know. I don't have a crystal ball. But what I'm more sure about is a different company that I just haven't found yet. Like, for example, Tesla. If I was thinking to invest in that company, that's opportunity cost that I could have been invested in Tesla. Okay, that's how you need to view this. And if you stayed around this point in the video, like, good shit, because like I'm pretty sure no one watches these videos. I just kind of make them for myself. So yeah, have a good day. If you have any questions, like, let me know. I honestly love talking about this shit. So adios.